But let's talk about the brokerage industry. Strong growth in client additions. That's what they've been witnessing. So what are the growth triggers going forward? What are the trends for the tier 2 and 3 cities? And overall current industry trends. Let's chat about all of that. We have with us Prakarsh Gagdani, the CEO at F5paisa.com, and Harsh Jain from Groww joining in right now. Gentlemen, hi, morning. Harsh, if I could kickstart the discussion with you, the pandemic has clearly led to a major disruption in the brokerage industry. We are seeing a structural shift now towards discount brokerage. What is the kind of momentum that you are witnessing in terms of client additions?
Yeah, hi. First of all, thanks for having me on the show. So I would say, of course, we are seeing the two events. The pandemic has changed a lot of way people are looking at their money. And at the same time, we're seeing a very good traction in the broking industry. A lot of new people, younger people from tier 2, tier 3 cities also getting interested because of various reasons in the investing in the markets. And those two events have happened together. There is some correlation, I would say. One has led to some impact on other, but I would say they're still independent. They're still you will see both these things even after we have come out of the pandemic. You'll still see that kind of attraction because currently in our country we see the penetration is very, very low, and now more and more younger population having more disposable income, more access to the information knowledge. They are getting aware about these products. They're getting aware about these opportunities, and now they have means. Given the technology, the mobile, internet apps, information, now they have means to be able to participate in these markets.
Prakash, hi, morning. What has been your observation in terms of client additions that one has seen?
Yeah, hi, morning. First of all, thank you very much for having me on your show. See, for the entire year, even now, there has been a phenomenal rise in terms of a customer addition, and it started off way around last week of Feb and March 2020, and there's been a phenomenal rally. So as Harsh also said, that there's a structural change what has happened in the entire population of people who are earning towards capital market. I mean, though it was slowly in the background started somewhere around 2019-20 by investing into mutual funds. But with 2020 and with pandemic, suddenly we see a lot of millennials, a lot of tier 2, tier 3 guys coming on the platform. What has also happened is the kind of penetration of the entire discount broking space where the opening of a Demat account and doing KYC has been far more easier and far more seamless and simple. And that has, when one thing led to another, and obviously the word of mouth has spread in the smaller towns. And that has led to a phenomenal growth in the Demat account and also the penetration of millennials in the markets. One more point is we have to see that the other avenues for investment and the returns on the investment has gone down substantially. So today a fixed deposit hardly gives you 3.5%. Even liquid mutual fund or a debt fund hardly gives you 6.5%. So avenues have gone down. Real estate, on the other hand, has not grown. So multiple factors, you have COVID, you have easy to approach capital markets, booming capital markets where Nifty is giving almost 40-50% returns in a year, and plus other revenues going down. So I think it's multiple factors put together, which has led to this phenomenal rally that we are seeing today.
Prakash, the brokerage rates are only heading lower. In fact, there are brokerages which now say that will not charge you any brokerage also on delivery. So what is the pattern there? I mean, are brokerages now likely to get into some kind of a war in order to acquire customer? Because everybody knows that current P multiples and the current private equity investment is not based on profitability or cash flows in the near term. It is on customer acquisition.
So I think the price war had already started way back around 1.5, 2 years back, or maybe 2.5 years back, when discount broking companies like us and a few others had started making inroads into the capital market and started garnering the market share. So that war had already started. from here on, my personal take is, and obviously I may be wrong, but I think there is very less room to go down in terms of prices, because over a period of time, running a broking business, there is a capital investment. Regulatory changes have made it more difficult in terms of capital. So you need a lot of capital to keep it in exchange and do process your transactions. So there is a money involved, and that will, I think, prevent prices to go down further. But I think what has happened now is that discount broking and a flat broking is an established concept. People understand. So there is a natural flow and an inclination of customers towards this space. So I think it is important that we focus on product and we focus on ease of doing business with the customers rather than doing a pricing war. A pricing war is a lose-lose situation for everyone beyond a point, irrespective. And obviously, capital is not infinite. So at some point of time, people will realize that it is important to make money on whatever your investments are, rather than just burning, in terms of acquiring customers.
Harsh, what is the pattern in terms of the activity, what some of the new customers are doing? Are they more like day traders? Are they more looking at quick gains? Are these long-term folks who are looking at creating a portfolio, and are they working on the path of wealth creation? Because customer acquisition is one thing, but purely for our understanding on the profile of customers, how much they trade, what category do they trade, what is your take?
Yeah. There is no specific pattern, I would say, for the number of new users who are coming on the platform, but we do observe there a mix of how they are doing intraday versus they are doing investments for long term. One interesting pattern that we've observed, if so-called pattern, is people are actually these young investors, even though contrary to the general opinion that they will be coming for a common, is like a very quick gain. They will be just staying for a few days and the market goes back, then they exit. That's not happening. So these new investors are very well informed when they're entering. They're very well versed with how the risk, how the volatility works in the market. And you see and observe when you see the markets going up and down in their behavior. For example, traditionally we've seen the market goes down, everybody starts selling. But what we are seeing is a reverse. People actually want to buy when the market's going down because they realize that the value of the company remains same and there are external factors. So if I have to just, I've been talking, so if I look at my elder generation and the kind of investment they have made, they would have made on anyone's advice or someone around, or they've read something and then they would have done it. So it was more black box for them than today. People now are so much aware. They know exactly why they're buying, what they're buying. They research, they look at the content. They have multiple communities they interact with, and then they buy. And so when the volatility comes, then also they're interacting with the people, they're learning and kind of reacting on it. So I would say it's not a fad or a fashion why people want to get in. It's a need that people have realized that they want to get in. Now with the new brokers, and just touching on the previous point also of discount broker, I would. So my take on it is, so discount broker probably is not now the relevant term. It's, I think, ease of investing, which all people like, 5paisa, Groww. We have invested a lot on building that ease of investing and keeping things simple. So keeping pricing simple helps people to now able to invest, get into it. So that trend has removed the friction and got more people into it. And now available content out there has helped them do the right thing with their investments.
Prakarsh, what is the importance of paid advice in today's time? I mean, the broker will charge you because he had paid advice, he had better research, he had better access to information and understanding. Today, all the new age platforms are giving you enabling platforms which are technology based, where you can check and decide. The advisory part is not that strong. So what happens to the typical advisory model where I give you better information and you give me business?
See, advisory has always been very core to the full service discount broking arm, and I've spent a lot of my career in the full service side, and we always thought that research and advice is the key to engage a customer. It remains. But what has happened is that there is a plethora of information available, free online. There are, education tools which is available. There are independent advisors which are available, and then you have, for example, like us. What we have done is that we have incorporated the entire advisory and the research piece in our app, in our product. And people, if they are interested in taking that advice, they have to just pay a nominal fee, and then they are exposed to the entire research and advisory piece. But what we've realized that there is a smaller section of customers who want advice from brokers, but a larger section of customers want to do their own research. They may listen to, or they may seek advice from independent advisors, or they may go on YouTube and see videos of some people, or they may also research on their own. So, but the crux of the matter is that most of the people want to do on their own and be responsible for their own decision. And that is precisely because the capital with which they are coming is a smaller one, right? The moment you cross a substantial investment, that is when you actually look for a relationship manager or a wealth advisor. And that's a quasi wealth management. Either you go to a mutual fund, or you go to a PMS, or you have senior wealth advisors there. But I think at a mass retail level, people like to do their own research and then take a call on their investment. But if they're looking for advice, obviously, our platform does provide that at a nominal fee.
Right. So, Prakarsh, going forward, where do you think the sizable opportunity for the industry is going to come? A lot of people also attribute a growth in the retail participation to the work from home model, and which is why, the pandemic gave birth to a re-emergence or an emergence of the Robin Hood traders or work from home traders, whichever way you may want to call them. But going forward, where do you think the big triggers are going to come in from?
See, I think the trigger for this, every industry, especially in digital space, need some kind of a trigger or an influx point. I mean, for demonetization did for payments, for wallets. And then you have, again, pandemic, which has become an influx point for even broking, as well as even on the OTT platforms or maybe digital streaming platform. So I think there is an influx point. Beyond that, then it is a natural growth. Obviously, because of a long history of ups and downs in the capital market, and because it's a cyclical market, there's always a question mark that whether this growth will continue, and this may be a reason, but is it sustainable? I think we have seen a structural change. The influx point has already come, and now it is only a matter of word of mouth getting spread within people, and they come into capital market. So I think the opportunity is still huge. We are still looking at just hardly 5% of 4 to 5% of the population actually investing into capital markets, either by mutual funds or by stock market or direct equity. I think there's a huge scope even in this space, even now, despite with whatever phenomenal rally that you've seen. And even with whatever numbers that I see on the exchange every month, I don't see that trend is going down. I mean, the same question was asked to me somewhere in October, November, that whether the rally is done and whether the party is over. And I said that time also that it's just begun. We have not even seen what the potential lies. So I think that's a phenomenal potential available even now.
Sure. Harsh, the stock market penetration has been way lower as compared to the developed markets. We were just tracking as to how the Dow turned 125 years old just yesterday. In that sense, the India market is still at a very, very nascent stage. Over the next 2 to 3 to 5 years, where do you think the next lap of growth is going to come in from for retail participation to try and at least match up to its developed counterparts?
Sure. See, the penetration in India is obviously very, very low. It's very, 4-5%, even lower with the active investors. And if you see out there are countries, both the developed countries and developing countries, where the penetration of the retail participation will be close to 40-50% or even beyond. So what has happened is, because of all the industrial revolutions and the urbanizations and all, people have moved to the urban cities, and they have been exposed to a lot of these services, a lot of these products, the knowledge, information, and the people who could come out and reach it to them and solve their problems and kind of introduce them to the investing products. And the trend is now getting more democratized. Now with your DIY kind of investment platforms, it's anyone, everywhere, anywhere can actually do it. He just need to have a identity, which now, thanks to Aadhaar, everyone, almost everyone has it, and mobile, which is again now the revolution which has happened in the last 5 years, and of course the content which is happening in the last few years. All this way, these things together has now enabled everyone in the country who has the money or interest to invest, even with the smaller money, even with 100 rupees, 500 rupees, they are starting, they're getting into the industry and they're building their learning, building their wealth for long term, and kind of participating in that industry for long. Now, this I see in the next 5 years to 10 years, we'll see more and more participation coming from the tier 2, tier 3 cities. A lot of time, the content, the information available was in very few languages, English, Hindi. But now we are seeing that disruption happening. Now all the content is available in multiple languages. So people are able to access in their language of comfort. They're able to access very, very simple platforms there. The KYC, everything is digital. So just going beyond and beyond the country, I think people with lesser investable income can start. People with a lesser reach to the advisors, experts can also do it on their own now, and much younger people. So what we've seen traditionally, if you look at the industry, mutual fund last 5 years or before 5 years and all, the average age used to be 40 years old. Now when you see platforms like us, we see average of 26, 27. So the entire shift of it's not just the geography shift, it's also a generation shift that is happening. Now much younger people have, the younger generation have more money, they have information, they have an insight that they want to put money and they want to participate in the capital market, which is for long term, which is for growth in their wealth.
We'll let you go on that note. Appreciate your time. Thank you so much, Prakarsh, as well as Harsh, for joining in and giving us a better insight as to what exactly the outlook is on the broking boom, as well as how retail has seen quite a frenzy of late.